Bond markets price in a 40% chance of an interest rate hike in August. Qatar considers buying a stake in Virgin Australia, and the case of the two NASA astronauts stuck on the International Space Station. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 28th of June, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, bond markets have priced in a 40% chance of a rate hike in August as the fallout from Wednesday's hot inflation figures hits markets and sentiment.
Yes, inflation for the 12 months to the end of May came in at 4%. Underlying inflation, which the Reserve Bank prefers, was 4.4%. A bunch of market economists now expect the next move in rates to not occur until towards the middle of next year. They're still saying down, but they've pushed it out. National Australia Bank, for example, has changed its forecast to May next year. Bond markets sold off yesterday with 10-year bonds hitting 4.4%. Markets have now priced in a better than 1 in 3 chance of a rate hike, yes, hike, in August. Bond markets are far more nimble, perhaps flighty might be a better word, than market economists, and that kind of explains some of the discrepancies in forecasts. The market economists tend to look further ahead. Bond traders think about it in the moment. It doesn't, though, mean that the bond markets are necessarily wrong. Judo Bank economist Warren Hogan, who was formerly chief economist at ANZ, expects a rate rise in August. The smoky in much of this is what will people do with their July 1 tax cuts. The average full-time worker in Australia earns $101,600 and their monthly take-home pay will increase by $185 on July 1 when the revamped Stage 3 tax cuts come into force. If the majority of people go out and spend the money rather than putting it into their mortgages or saving it in some other way, then the chance of a rate hike increases. Maybe 2 rate hikes. As a comparison, a 25 basis point increase in mortgage rates would add $82 to monthly loan repayments per month. That's on a $500,000 loan. So a couple of those would quickly eat up those tax increases if people are actually spending their money rather than saving it.
And Sean, the interest rate debate also has political implications, doesn't it? With the opposition hammering the government in question time yesterday about the cost of living and, of course, about rising inflation.
Yes, it's a gift for the opposition. And yesterday, opposition leader Peter Dutton opened question time by asking why Australians have to live in fear of another interest rate rise. Leaving the details of what's right and wrong aside for the moment, it is a very effective political attack on the government. And of course, there needs to be an election within the next 12 months. The further interest rate cuts are pushed out, the worse it is for the government. Treasurer Jim Chalmers said inflation is still higher than the government would like, but he also spooked Labor's economic credentials compared to the previous coalition government.
Sean, a quick question from a listener. Yesterday we shared a great question from a listener. Another one today from someone else, Lockie, who was listening and wrote to us via Facebook. And he says,
"Hold on. Do I have to answer this?"
You do. I'm sorry. I should have told you this. You have to answer this question. And if you don't answer it, I will be disappointed. And you do not want to disappoint Lockie either, our listener. Because Lockie says, a question for, well, it doesn't say for Sean, but it is for Sean. Is it just me, or are interest rate hikes null and void for the portion of the population that holds most of our cash, the boomers? Given they don't have mortgages and have a war chest of funds, do interest rate hikes discourage them from spending?
What a cracking question. And he's right. I mean, I'm not sure that quite the numbers whether the baby boomers hold the majority of cash, because the baby boomers are only they're probably the wealthiest cohort, but they're only probably 20% of the population or something or other. But his point is exactly that. Monetary policy, interest rate policy, is a very blunt instrument. And it hurts people, it hits people hard, but not everyone equally. And Lockie's point, so if you've paid off your home loan and maybe you've actually got savings and so you like higher deposit rates, higher interest rates are great. You absolutely love that. If you're a new family, you've got your first mortgage, they're the ones that were hit really, really hard. What about people who, have lower paid jobs, they have a mortgage or rent? Interest rates hit them hard. It's not fair. It is definitely not fair, but it is the way the policy works.
How about the relief in your voice that Lockie's question was one that you could answer on the fly?
So true, so true.
Just the sheer panic when I started to ask you the question without notice. Look, it's also worth mentioning here, and Lockie would certainly enjoy this one. Thank you, Lockie, by the way, for sending in your question. And if you do have a question, just feel free to shoot it through via Instagram or Facebook or LinkedIn or any of the places where you'll find Fear and Greed. I love to receive them and I love to surprise Sean with them. But stick around after the show because you're actually speaking today with Warren Hogan, who is the Managing Director of EQ Economics, Economic Advisor at Judo Bank and previously the Chief Economist at ANZ. Very, very well credentialed. And he lays out the situation in terms of interest rates and what the Reserve Bank has to do, I reckon, better than anyone I've heard do it previously.
Yes, he is a great communicator. What he does is outline the argument why the Reserve Bank will seriously consider lifting interest rates in August. And he, as you say, he just does it incredibly well and goes through the different parts of the economy and why the Reserve Bank almost has to lift interest rates in August. So a business person, an economist, an investor, you need to listen to this interview. It's a really fine chat that I think probably as well as we've done on this show puts forward the argument for a rate hike.
Yeah, absolutely. And it's in such clear language that I think anyone can understand. So if you want a better understanding of how it all works, I encourage you to give this one a crack. Sean, on with the rest of the show. Local markets, how did they perform yesterday?
The S&P ASX 200 tumbled more than 1% in early trading, only to clamber its way back, closing the session 0.3% lower at 7,760 points. Interest rate sensitive sectors fell most, and specifically the REITs, the real estate investment trusts. That index was down more than 2%. Tech stocks did best. Among the large caps, there wasn't a huge amount of movement, while Transurban closed down nearly 3%. WiseTech finished up 2.5%, but most of the other top 20 stocks ended not too far away from where they started the day. In corporate news, TV and radio broadcaster Southern Cross Media has rejected an offer whereby it would take over Australian community media. Japan's Mitsubishi Motors has taken a 5% stake in ASX-listed business Fleet Partners, the fleet business. And an update on Guzman y Gomez, the fast food group that floated on the ASX last week. The issue price was $22, Michael. Day one, it closed at $30. That was its peak, though it has mostly stayed above $29 a share. What's emerged is that there are a number of short sellers in Guzman, investors betting that, whilst trading around $29, they're betting that the group's share price will fall.
Now, Sean, thanks to Blue Chip Communications, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. We need to check international markets. What's going on?
Well, oil prices are flat, but gold slipped. It's back under $2,300 an ounce. The precious metal hasn't been consistently under this level for about 10 weeks. A bunch of the gold stocks, as a result, have fallen off in recent sessions. Uranium prices have fallen sharply to their lowest levels this year, triggering a sell-off in local stocks including Paladin Energy, Boss Energy and Deep Yellow. Copper, a bellwether commodity for the economy. Also, the price of copper also keeps falling. They're now about 14% below the highs reached last month. Bitcoin's dropped back somewhat, while the Aussie dollar is trading around 66.7 US cents. Before we leave currency market, the Japanese yen has fallen to its lowest level against the US dollar since 1986.
Okay, we have a fair bit to get through today, Sean. We'll be back in a moment with the rest of the day's business news. Sean, Qatar Airways, one of the world's largest airline groups, is negotiating to take up to a 20% stake in Virgin Australia, has plans to list the number 2 carrier Drag On.
Qatar is owned by the Qatari government and already does code sharing with Virgin. According to the Financial Review, negotiations between Virgin owner Bain and Qatar Airways are ongoing, and they come after Virgin's advisors had considered selling a 20% stake to Singapore Airlines. Any deal with Qatar would need the backing of the Foreign Investment Review Board. Qatar's relationship with the Albanese government has been fraught, shall we say, mixed. One of those, one of those words.
Yes.
Yeah. The airline's attempt to add more flights to Sydney, Brisbane, Melbourne and Perth was blocked by Labor last year. The government back then gave reasons like they need to protect aviation jobs and to help Qantas investment in new planes deliver good returns. No one really bought that. Virgin argued that the decision to block additional flights, which was opposed by several state governments and tourism groups, only helped protect Qantas's market share. particularly on lucrative flights to Europe. Bain had hoped to list Virgin on the ASX this year. That is now looking increasingly unlikely.
Total household wealth in Australia, what we all own, has pushed beyond $16 trillion, Sean, thanks in large part to rising house prices.
Total wealth was up $1.5 trillion over the last year, with what the Bureau of Statistics calls residential land and dwellings contributing about half the rise. The other big contributor was rising superannuation assets, and that's been helped along by a strong share market. About 2/3 of household wealth sits in bricks and mortar, and that percentage is growing, rising from 62% 4 years ago to about 67% now. The amount of money people put on deposits also rose over the past year, though the pace of growth has slowed. It's just people are spending more and saving less than they were a couple of years ago. Most of our money is in the housing sector.
Now, Sean, a story we've talked about for much of this week, Julian Assange. He's back in the country, and perhaps not surprisingly, his arrival triggered really a political stoush in Canberra.
Mr. Assange's first phone call when he touched down on Wednesday night was to Anthony Albanese. He told the Prime Minister that he had saved his life. His return followed a deal whereby Mr. Assange pled guilty to a single criminal count of conspiring to obtain and disclose classified US national defence documents. Both sides of politics have worked to get him back to Australia. He had been in a British prison for 5 years, and prior to that, the Ecuadorian embassy in London for 7 years. But yesterday, the bipartisanship slipped away. Opposition Foreign Affairs spokesperson Simon Birmingham said it was inappropriate that the Prime Minister spoke to Mr. Assange, saying while it was good the legal saga's over, he shouldn't receive the same homecoming as others who have been, and I quote, truthfully, truly, wrongfully detained.
The number of job vacancies has fallen to 353,000 across the country, suggesting that the heat is definitely coming out of the labour market.
Very important this. The Bureau of Statistics figures show that job vacancies peaked 2 years ago and have been falling ever since, though they remain above their pre-pandemic levels. This is particularly the case in public-facing industries, such as accommodation and food services and arts and recreation services. In fact, there are still around 125,000 more vacancies than there were in February 2020. Vacancies, of course, are a leading indicator of what's going to happen to the labour market and the unemployment rate. Thus far, this economic cycle, the labour market has, in Reserve Bank Governor Michelle Bullock's words, remained tight. It just needs to loosen up a bit. And fewer job vacancies suggests that's exactly what's happening. Over the quarter to the end of May, vacancies fell sharply, particularly in wholesale, trade and manufacturing.
Sean, miner Lynas will start production of 2 heavy rare earths, dysprosium and terbium, from its Malaysian processing plant, breaking China's stranglehold of the metals used in modern weapon systems.
The US and Australian governments are taking a much harder line on who owns and produces minerals used in the electrification of economies, wanting to reduce reliance on China. Lynas is basically a beneficiary of that. The heavy rare earths will be sourced from the company's Mount Weld mine in Western Australia, along with other rare earths, what they call light rare earths. Lynas is the biggest non-Chinese supplier of the minerals. Now, as we know, we've discussed this, rare earths aren't particularly rare, but they are very difficult to process. And Lynas's Malaysian facility is a critical part of that whole process. Managing Director Amanda Lacaze said Lynas was poised to break the Chinese monopoly on heavy rare earths and lessen the threat posed if Beijing opted to cut off supply to the US and its allies.
Sean, Tesla chairwoman Robin Denholm and National Basketball League owner Larry Kesselman have bought a majority share in the Australian Women's Basketball League.
Quite the investment. The pair have agreed to spend millions of dollars in the Women's National Basketball League, currently owned by Basketball Australia, in exchange for a controlling stake that will allow them to reposition and grow the game. Miss Denholm's interests, as in the company that she's running this through, will take a 49% share, and Mr. Kesselman's NBL will take a 29% stake. Mr. Kesselman bought 51% of the NBL, the National Basketball League, the men's league, in 2015 for $7 million. He now owns 94% of it. Media reports suggest the total value of the women's league is around $25 million. Ms. Denholm is already part owner of the Sydney Kings and Sydney Flames. Is it ironic that the head of basketball is only 5'1", 155 centimetres?
I honestly don't know. I'm sure well, it's probably unlikely that she would be able to play.
Right. She may have been a player in her time, though. Obviously, she loves the sport.
Absolutely. Yeah. But I'm sure there's also plenty of kind of weedy people like myself that would probably kind of own like rugby league teams.
Yeah, yes. I think that's a very fair point.
Or you look at like old mate who owns the Dallas Cowboys, right?
Yes. Who owns that?
Who's like isn't he like 80, 90 years old or something?
Oh, yeah.
Like he's hardly
yeah.
going to get out there and play, is he?
Jerry Jones. There you go. I Googled it
Jerry
while we're
Jones.
talking. Yep.
That's his name. How old is he? 81. 81.
Yeah.
Thank you, Google. Back on track. International news time now, Sean, and a very, very, very exciting day this is for anyone who is interested in US politics, because at 11 a.m. Eastern Standard Time, presidential hopeful Donald Trump will square off against incumbent Joe Biden in what many think is the most consequential presidential debate for many, many years.
While both have their rusted-on supporters, many US voters seem to like neither. So this morning is an opportunity for Mr. Biden and Mr. Trump to sway electors, or at least not push them away. Polls suggest tens of millions of Americans will watch the debate, to be held in CNN's studios in Atlanta. There's no third candidate, even though John F. Kennedy Jr. is running for president, but he didn't quite meet the criteria for this debate. The economy and the cost of living crisis, the conflict in the Middle East, border security and immigration, abortion rights, and the age and health of both men are all likely to get a good run. A few rules, Michael. Joe Biden actually decides which side of the stage he wants to stand on. Donald Trump gets the final comment, the last person to speak, and perhaps sensibly the non-speaking candidate's microphone will be muted when his opponent is talking.
That's probably quite valuable, isn't it?
Yeah, definitely.
Because this is the first ever debate between a sitting and former president.
Yes. It would be, actually.
Because the last time there was a rematch was in the 50s.
Wow, yeah.
And I, for one, Sean, will be watching.
11 a.m, Sydney, Melbourne, Brisbane time. Be there.
It's on like Donkey Kong. Now, Sean, last one. This story feels like it's been included for me. Boeing is under pressure after suggestions that 2 NASA astronauts had become stranded on the International Space Station because of problems encountered by the company's Starliner spacecraft on its long-delayed first crewed flight.
So NASA and Boeing decided last week to postpone for the second time the return flight of the spacecraft, which docked with the space station on June 6. It's been delayed until an unspecified date next month. Starliner was performing well, the company said, and astronauts Suni Williams and Butch Wilmore could return to Earth at any time, if necessary. Well, you'd think if that was the case, why did they delay them? Anyway, it comes at a pretty poor time for Boeing, which is still mired in controversy over the safety culture in its commercial aerospace division, according to a report in the Financial Times. The defense and space business of Boeing, meanwhile, has been struggling financially. It lost about $1.7 billion last year. NASA's hoping Starliner will eventually be a viable competitor to Elon Musk's SpaceX for cargo and crew to the International Space Station and eventually the Moon too. But for the moment, there's a couple of astronauts in space, kind of stranded up there.
A couple of interesting things here, Sean, to point out. Yes. Do you know that Butch Wilmore, his name is actually Barry Wilmore, but Butch would have to be the most American nickname you could give to an astronaut, isn't it? And Butch Wilmore, interestingly, is 61 years old.
Right. And we're getting ageist here, Michael. Be careful. Go on.
No. But, you kind of always have this preconceived idea that astronauts are all going to be in their kind of 20s and 30s because it's like so physically demanding. But clearly experience and knowledge and capability counts for a heck of a lot more than just the physical capacity and ability to do it. And the final point I need to make here, Sean, and this is starting to sound like the weekend edition, isn't it?
It is.
But the final point I need to make here is that if you haven't already, go and download the ISS Spotter app, which is the International Space Station Spotter app, ISS Spotter. You can get it from the App Store, all that kind of thing. And you can actually see when the space station will be passing over, and it tells you how clearly you'll be able to see it and kind of at what time, exactly what time and where in the sky you need to look at it. And you can go and check that. You can walk outside and you can give Butch a wave as he passes over, knowing that he's trapped on that thing.
Yeah. What a good idea. What a good idea. Yeah. One thing, I just make a quick comment on that. You know, when you get on a plane and you see the 35-year-old pilot versus 65-year-old pilot, who do you feel more comfortable with?
Oh, absolutely. It's the 65-year-old.
Yeah, totally.
Yeah. Every day. But then again, they're not having to do those G-force tests where they go up to like 9 Gs.
Oh, Michael, you mock we oldies. You mock us.
I do. I mock you every day, Sean. It sounds like you're surprised by this. Anyway, we're pretty much done now, aren't we?
Yeah, it's over.
Up next is the Fear and Greed Daily Interview. Warren Hogan is your guest today, economic advisor at Judo Bank.
He gives us in beautiful detail, eloquently, the reason why the Reserve Bank could lift interest rates in August.
Yeah, and I'm genuine in saying I think this is one of the best interviews that you have ever done on this show. So it is an absolute must listen. Go and check it out, and it will just entirely change the way that you understand how the Reserve Bank operates and the factors that they are having to consider in terms of potentially putting up interest rates. Go and check it out. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 28th of June, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.